Okay, everybody. Hello, hello. What a day for us Bears. Uh, Certainly what we were looking for this week, both in cash and futures. So we're going to go with bonds here first, which were up at one point today, and they really started to hit them. I didn't see the exact time frame. I don't care quite as much with the bond trade about some of the intraday kind of moves. The bonds are ticking up here as we speak, which, as you know, makes me a very happy man. We want those rates dropping like a rock. Well, my portfolio does, I don't. I don't necessarily like the yields. Yeah, ignore that. I've got some guy trying to sell me something. I trade my own money. I don't need other people's products. It's always nice to hear somebody else's pitch. So same thing here in the 10-year. 10-year bounced a little bit more than the bond, but not quite as much as we'd like to see here, which I think is somewhat fascinating. We're going to go into the VIX as well after looking at some of these S&Ps here. Yields down marginally. Nothing really to write home about in the bond world today. Once again, I do expect more upside in the bonds as time progresses. So, story of the day, and this is what I've been watching, as I'm sure a lot of people have, a lot of you bears out there have been. Here is the ES. I think we're trading March now. I don't really pay attention to all that stuff because I don't trade the contracts themselves. So, to me, it's just a bunch of nonsense and information I don't need to know to further clog my mind. So we really got hammered from last night into today. They did recoup some of their gains today. We did get as low as 26.21 here on the futures. So we're looking at approximately about 20. Let's see, high to low, about a 40-point range today, which is a little bit larger than we've been seeing. I continue to strengthen my bearish case with days like today. They are hitting them again, down another, looks like 9.25 points here, which is a good sign. I would have liked to have seen a little bit more volume today. That's something that is just, it's like a follow through. The price is what matters the most, followed by the 80 MA, followed by the 50, 200, and sequential. The volume, once again, it's like a follow through. The more the volume of the move, the more conviction that move holds. So considering the fact that we didn't see very high volume today, it really is kind of fascinating to me. And at least this is on the futures, and sometimes these volume bars are a little bit strange. Oh, excuse me. Another crazy day. Not quite enough Navajara coffee today, Cuban style. Once again, not being paid. I have no deal with Navajara, but that is my favorite coffee, and if they want to sponsor my show, I would really appreciate that. That would be awesome. You can find that on Amazon, I believe. I don't have links. So going into crude, we did have the same setup here today. I don't have anything crude. I've been straying away from it, focusing a little bit more on stocks as opposed to commodities lately. Crude is, it's just like 1-to-1. So it's like if you're short crude, you would be like hedging a long stock position because they're almost exactly. We had the short squeeze back in here, the slow grind up through the 50, and there's just really nothing to say about crude oil right now, and I can't wait till it breaks away. Because once we start to see a little bit more autonomy in the crude oil market, I think I may start trading it again. But as long as we're seeing high correlation to the S&P, I don't see any point if I have a stock position on. I want some things that aren't stock correlated, at least to a smaller extent. Oh, excuse me, I'm like just having a thing today. So the real story as of late, as we keep seeing like very meager action in the stock market, the euro did follow through with the 2 above a 1 today. So it would have been your buying opportunity if you were getting in the euro. I didn't take this one. We'll see how this performs on a pullback, likely around a 4 or a 5. If we get a nice pullback to a reasonable level, maybe I'll consider putting something on. But since I don't do spot forex, like options on FXE, it's not even worth it most of the time. And you can't really pull enough premium out of those for it to really be worth it either. Selling spreads and things of that nature. So due to that fact, the dollar was marginally lower today. More wackiness in trading view. I don't know what the deal is. So contributing to the gold, I don't know what the deal is here with trading view. It's being very weird. Go to log scale. Just list the charts. There we go. So we did get the pullback in gold today. It didn't come back to where I would have wanted to see it. Technically, so we were about, so right about the 786 Fibonacci there on gold. That probably would have been your buy signal. I would have been, if you were doing like GLD calls or something like that, or buying the gold futures or doing spot on like a forex exchange, XAU, that would have been your buying opportunity in gold. Once again, I didn't put anything on in gold. I have 3 positions that I've been clinging to as of late, and I haven't really been changing it because we just haven't had follow through in the places that I've been. SLV, same kind of deal. We got kind of close to the 20 today, so that would have been a good spot to be a buyer. Oh, and here we go, finally. Bitcoin, I think we're heading back to 3,000. We did break below this level here very briefly today. We finally got some volume here on this lower candle, which is something that we've needed. Like, we haven't had anything since way back here, and we've pretty significantly broke the volume over really this entire consolidation area. So Bitcoin is likely going back down. Sequential says so. We're riding the 80 MA pretty nicely here. No price extremes. So typically we start to see the rounding over and puking here back down. Likely this is my target. We do have a setup trend line printed here, just marginally above 3,000, which makes sense. So we'll be coming into really a support area that goes back to the 2017 rally. If we can get off far enough here. So yeah, that's the 2954 right here. It was one of the topping areas back in 2017. And that really came off of a very large move. On the weekly chart of Bitcoin, which is something else I've really been watching. Now we got an 11 coming in here. The 2 did not go below the 1, which is one thing that I really wanted to see in Bitcoin. which really was kind of unfortunate. It actually closed above slightly Doji City around there. We have a red 3 here, which I think is fascinating. So really, the sequential continues to, staying red, staying at a reasonable distance from the 8 EMA here. Aside from that, too, I'm looking for more downside. The only problem is, once again, this 200-week moving average. We're going to have to see how that reacts. Continuing to rise. Oh my goodness. I'm sorry, I apologize. Some days are just insane. By 8 o'clock at night, I'm just beat. So we want to get the exact number here in the 200. 32.98. Yeah, that makes sense. I don't think it's going to hold this time, because this is totally a dead cat bounce setup here, in my opinion. Every other moving average is turning down. 200 starting to flatten out just a hair here, and I think all the ammunition is pointing at a downside move here in Bitcoin. Really no reason to believe otherwise, except a lot of the Bitcoin community that just continues to be bullish on Bitcoin for really no reason at all. I think it's kind of silly. There's something that I want to look at here. We want to do a Fibonacci on the entire price move of Bitcoin, calling this the bottom here. That's really when the thing started. That's pretty interesting here. So the entire movement of Bitcoin, we've cleared all of it. There's really only one more adjustment we can do to the Fibonacci here. Is to say we go all the way down to the lowest point after the puke, and even there, the 236 is 4902, so we're through all the extension, or excuse me, all the fib levels here. There's just nothing really to say. I'm not going to get into time analysis on Bitcoin. It just got extended, and are we going to 1,000? I totally agree with that theory. At this rate, we still have a lot of people we need to spook out of cryptocurrency yet before I would even consider this to be healthy. And we still need a lot more bankruptcies and a lot more of this market to be cleared. Natural gas, I know I said I was going to slow down with it. One moment. Woo! Hot mess tonight, what can I say? So we are coming into an 8 here on natural gas, which could be a playable bounce. I've been learning a little bit more about natural gas as of late, and from what I'm seeing, we really could still have some good action here, really going into March. So maybe if we do get a perfect 9, that could be a buying opportunity. We'll have to see how that all plays out. Natural gas, because that, just like the VIX, is one of those like UNGs, others. So here, yeah, they did get hammered today, but they brought them back up into the close. Still watching for 928. Corn getting pretty rejected by that descending resistance there. Wheat, yeah, nothing really going on there either. So the VIX did soar today, and this is what I was talking about with the VIX and with the bonds, and this is what concerns me for the bearish case, and it's just something to pay attention to, because I've been really getting into these comparisons between asset classes and negative correlations and things like that. And the fact that the bonds were not at least a little bit higher today, and the VIX ended up getting smashed back to the 80 MA today, that does worry me a little bit. The S&P wasn't quite as radical today as the VIX was. Oh, correction, it was. See, I watched the futures all day long. Okay, so that makes sense. I didn't see that. For you YouTube people, I do my analysis for the day when I do these things, so really I'm getting a lot of the information that I need now. You know, because I do work full time. This is trading, I don't sit here at my desk all day and trade, so this is the time of day when I get my action. Positions. Now, Lennar has been a little tricky in here. It looks like it has a habit of doing this. With a lot of these big wicks here in the Lennar. It must be low float or something. Because it did gap down, and they did take it up to, well over $45 today, and it ended up not being able to close above the prior close on Friday, so that's a good sign for the bearish case. Honestly, if this position doesn't start picking up, and we can't really get strongly below this level I have here, this 43.84 on 1 hour, within the next 2 or 3 days, I'm probably going to unload this position. Playing the options, you're just losing money every single day that you have like this, or you stay in this range. So if we're not starting to see some momentum pick up to the downside here in 1 hour, it's probably gonna end up being a draw, a small loser. TLT, not really anything to see here. Staying at the 80 MA, failed here at the 20. It's kind of the same story as bonds, going nowhere fast. Same deal with TLT. If we don't start seeing some action, probably gonna have to dump those and just stay in cash until we see some momentum. VIXY staying about the same as the VIX, which is pretty normal. This thing tracks the VIX almost to a T, so we're just gonna have to wait. I mean, this is inversely correlated to the S&P, so if the S&P is strong, then the VIX is weak, and vice versa. So let's do a little forecast on the futures to try to see what we're going to look like tomorrow morning. Here on the 4-hour chart, we are now below the 50 moving average, 50 period. And getting rejected pretty hard. When they reversed this thing today, was a little bit of volume coming in. However, just completely getting shut down here at the 50, which I think is pretty bearish. Really, the 4-hour time frame for the ES, we don't really have a lot of support until 2600, and after that, 2569, which is the 200 period moving average. So, and we're on a 6, so 3, 12 hours from now puts us at 8 o'clock in the morning. Even with a nice little bounce, I think we'll still see a lower over tomorrow, S&P. I think there's a pretty good chance. Yeah, 2600 on the 4-hour chart, what do you know, there's a setup trend line, so it just works out that way sometimes. So news-wise, NVIDIA and Caterpillar had earnings today. I do not believe they did so hot. And my theory here with these futures, with the indexes, I think, because we do have Apple this week, earnings wise. I'm gonna get the exact date here because I have everything on my phone. I don't always write things down anymore. Oh man, earnings date 1/29. So tomorrow. So that would be tomorrow on Apple earnings. And I think that because if Apple really has terrible earnings, that could be a dagger in the heart of the stock market. And these people that are playing this game are very intelligent. They know. So my theory, and am I trading this? Not quite. This isn't the entire basis behind my trade. This is just my theory. I think they I think they're pricing in bad Apple earnings right now. I think that's today we had this weakness, as well as right now we're down 10 points. We're seeing weakness. I think they're starting to price that in. Apple did give not the best forward guidance either, so they were warning people that earnings might not be that good this year. Excuse me, for the last quarter of 2018. We're going to see what the chart looks like here in Apple. Because that sometimes can give us a little bit of something. Yeah, I mean, Apple's just kind of bouncing around here in a range, so they're just waiting. They're really waiting. So we have 150, 180. We got about 52, 58, about a $6 range here in Apple. Going nowhere fast. So this market is really just waiting at this point to see how Apple performs. And I don't think that they updated the chart. Once again, trading view. Really unbearable. Missing a lot of information here. Once again, which is very important. So that's what we're watching this week. If Apple, once again, if they have bad earnings, I think that's going to be the catalyst for the next swing low. We do have the Fed talking all this, I can't even stand to listen to those people talk anymore, because their job exclusively at this point, you can just provide any value in the world. They don't do any. The only thing they do is control interest rates, control the money supply, and feed you a bunch of BS. That's what the Fed does. So sitting here listening to them talk about how healthy the economy is, while at the same time slowing down the unwinding of their balance sheet, it's completely upside down world with listening to those people. And that's why I think it's just good to stay objective all the time. Like, don't believe what you hear. Like, in the financial world, this is so important. Your money is on the line. Your money is your lifeblood. And this is something that I think is very important to understand. Your money is your lifeblood. Your money is what allows you to eat, what allows you to have shelter, what allows you to have clean water. And when you're putting that kind of a thing on the line, when you're risking that kind of an important commodity, making intelligent decisions is very important. So staying away from nonsense like the Fed and Donald Trump and trying to trade deals and things like that, and staying objective, right? Don't think about the politics. Don't think about anything of that nature. Just look exclusively at what is going on in the market. How is the market reacting, as opposed to, okay, and this is what I think is really ironic. because you hear a lot of people saying that, ooh, this reversed because he said this or she said this. The market was hammered. The market got decimated here, right? We're coming from high up here, 28.14, to a low of 23.40. That is a massive move. Very large move. So the fact that we're having a rally here, right, is totally normal. There's nothing obscure about that. This basic market mechanics, like 101, that we have a rally after we have a very harsh fall of that nature. And the harsher the fall, like I talk about with Bitcoin, like I talk about with parabolic moves and anything, commodity stock, whatever it is, the harder the move, the harder the correction. And we got a harsh correction on low volume, which is exactly what you would expect, right, on a short covering relief rally to the upside after a very harsh down move. This is exactly what you would expect. This is very healthy. However, timing these things in a bear market, it can be very difficult. I mean, bear markets are, I think they're very difficult to trade and they're very risky, but the thing about bear markets is, and that risk, is you get paid for that risk due to the fact that when you get this thing right to the downside, you can make 2 to 3 times the profit in the same amount of time that you would trading to the upside. So that's the great thing about bear markets, and that's why these things aren't entirely bad if you know how to play them to your advantage. So just really things to keep in note. Make your own decisions, make informed decisions. Guys, I can never do this thing without being interrupted by phone calls and text messages. Viewing this, I really do apologize. Actually, before I resume, I'm going to make sure I don't get any more. Yeah, this is why I just need a studio where I can just leave, phones, all this other stuff, out and about, so I don't have to worry about text messages and phone calls. So you get right into that point. It's Murphy's Law. Right when you get into that beautiful idea, that beautiful message, bang, phone call. It's not even important. So, anywho, takeaways. Just don't believe any of the stuff that these people are saying. Watch the price, watch the reactions, watch the volume, right? And pay attention to those things as opposed to what's being said. Right? If the President of the United States says to buy stocks, do not buy stocks. So on that note, smile and wave, right? Smile and wave. I think we'll wrap this guy up here tonight. As for YouTube, I think I'm going to check out Google Hangouts so we can get a screen share thing here, because I talk this whole narrative about the technical analysis that I'm focused on, and you guys can't really see what I'm talking about. So on that note, I'm going to go ahead and wrap this up for today. Good luck, everybody, and let's see this thing break 2,600. This S&P, that really is what we're going to be looking for. And all eyes on Apple this week. 29th is, it's tomorrow. That's it. So all eyes on those Apple earnings. That's going to really give us a guide for how we're probably going to be playing this market for the next month or two. Have a good